Hey, soldiers, when we look at Tesla's stock, are we looking at something that is poised for long-term success and appreciation? Is this a situation where we'll look back on this point in history and say, wow, I'm really glad that I made a move and bought Tesla at that time? Or will you look back on it and say, I really wish I'd made a move on Tesla then? Now, look, guys, I am entertaining purchasing Tesla. I do not own any shares of the company right now, so I want to take you along on this journey with me. Again, you've got to understand these are insights, not advice. You got to do your own due diligence, of course. But today what we're going to do is we're going to take a look at some metrics to determine whether or not, and this again is not all encompassing, but we're going to look at a couple of metrics to tell us whether or not Tesla stock is undervalued. We'll take a quick look at that. Then we'll look at some of the industry innovation that Tesla has been responsible for. One thing in particular really bodes well for the company and pretty much says the industry really believes in what they're doing. And then finally, you got to stick with us to the end on this one because we're going to talk about a major car company who has just said, look, Tesla is all that in a bag of chips. We can't compete with them. And so we're going to throw in the towel. We're going to get to all of that. And we're going to start off by taking a look at Tesla stock, which ended the first half of 2023 up almost 150%. And the company right now, in terms of its market share, is just doing gangbusters.
Well, here in the U.S., Melissa, EV sales for Tesla, nothing's changed. They still dominate the market. This is the latest data from Motor Intelligence, which tracks auto sales for all the automakers, not just EVs, but we asked them, just pull the EV numbers for the first half. What does it show us? Tesla still controls this market. 60.4% of all EVs sold in the U.S. are made by Tesla, and they're way, way ahead of the competition. Hyundai has moved past GM to become number 2. There you see VW. Then there's Ford. By the way, number 5 is Rivian. So 3 stocks we want to look at here. Let's start first off with Tesla this year. They are adding some incentives. There's a report out of China that even though there's been this discussion about putting a floor in on EVs because of the pricing battle that's over there, there are some reports out of China that Tesla may have been adding some incentives there to further move the metal, if you will, out of the Gigafactory in Shanghai. No confirmation from the company, but this is going to be one of these brutally competitive markets, I think, for some time to come, despite the fact that there's talk about a truce, if you will, when it comes to EVs.
Let's take a look at a couple of the metrics that deal directly with the company's financial performance. Cash flow to debt ratio. This is basically the ratio of a company's cash flow from operations to its total debt. Now, Tesla's cash to debt ratio is 3.97 as per the latest numbers. That outperforms 81.27% of companies in the vehicles and parts industry. That indicates some pretty strong financial health. In the past 12 months, Tesla has had revenues of $94 billion, earnings per share of $3.53. Its profitability is considered fair. It's got an operating margin of 13.5%, which is better than 88% of the industry. Now, it is fair to say that Tesla's only been profitable for 3 of the past 10 years, but the company has been growing and innovating in that time. So that's something that can be kind of expected, a company to ramp up into profitability. And talk about innovation. They've been putting a lot of effort and resources into research and development, and it's been paying off for them, especially when you consider one of the innovations that we're going to go over in just a second. The company's growth is a crucial factor in the valuation. Faster growing companies, especially those with profitable growth, create more value for shareholders. Tesla's 3-year average annual revenue growth is 36.4%, which outperforms 93.69% of companies in the vehicles and parts industry. Its 3-year average earnings before interest, taxation, debt, and amortization, EBITDA, growth rate is 83.9%, ranking better than 97% of industry peers. Again, another indication of strong growth. All right, Guru Focus put together some data analyzing the Tesla stock. Now, analysts are coming out of the woodwork, all right? You have to examine these metrics for yourself and do your due diligence. Of course, you can use the analyst information if you want, but just letting you know that Guru Focus says, in conclusion, Tesla stock appears to be significantly undervalued. The company's financial condition is strong, its profitability is fair, and its growth ranks better than 97.36% of companies in the vehicles and parts industry. All right, Tesla's definitely here to stay. We do know that. I think this electric car thing is going to catch on. Now, whether or not it is the best thing for the environment remains to be seen. But as prices come down, you see more adoption of these cars. And Tesla is leading the way. Of late, Tesla has proven itself to be such an innovator, especially on the charging aspect of this whole industry, that other car manufacturers have voluntarily started to adopt Tesla's standard. And this is going to help Tesla. I'm going to tell you how in just a moment. Ford, GM, Rivian, Volvo, Polestar, and Mercedes-Benz have announced plans to adopt Tesla's North American charging standard. This makes it possible for their products to access Tesla's vast and growing network of supercharger stations. Now, what's important about that is the network that Tesla has is the most ubiquitous as of right now. Okay, and it looks like that will continue to be the case. So, these other manufacturers are going to configure their technology to have it work with Tesla's charging stations to the extent that they can. But this may seem counterintuitive if you are a Tesla investor, and it may seem like it's going to encourage shoppers or car buyers to go ahead and say, oh, well, Tesla charging stations are out there. I can go ahead and buy this Ford EV. But here's the kicker. It's not clear to what extent these car manufacturers, non-Tesla, that signed on to the North American charging standard, have equipped their cars to take advantage of the North American charging standard's higher charging rates, currently capped at 250 kilowatts, with 350 kilowatts being tested. These limitations would be on the car side, having to do with the capacity of the power electronics, the charging conditions, and mood of the battery management system. Tesla's North American charging standard may be the proverbial camel's nose as the rest of the industry inevitably migrates to Tesla-like electrical architecture and codeware in the interest of compatibility. So if I want to take advantage of those faster charging capabilities so that it will bring me into line with what the time it takes to fill up at the gas station, I probably want to just err on the side of caution and just buy a Tesla, all right? Now, that's going to be a very big piece, the ubiquity of these charging stations, so that you know that just like the gas station infrastructure, a lot of Americans ride around on E, and they do that because they're confident they're going to be able to find a gas station. So we got to have the same type of ubiquity with the charging stations to some extent, okay? Whether it be some capability at your home or, again, like there are gas stations right now. Well, right now there are technical impediments to that with regard to electrical capacity in neighborhoods. That's a video for another day. But the other thing is the speed at which you charge. You've got to bring that down, and these superchargers definitely do that for Tesla. There needs to be some engineering that takes place in order for that to happen with the non-Tesla EVs. All right, now let's go on and let's talk about that manufacturer that said, you know what? We can't compete. We're going to go ahead and cede this electric business. We're going to go ahead and cede that to Tesla. Their dominance has pushed a competitor out of the market. So first, let's get some insight into the thinking of the manufacturer that threw its hands up and said, we can't, take it anymore, Tesla, you win. Let's get some insight into how they view the industry in terms of being a competitor with Tesla. So Tesla set a record for deliveries in the first half of 2023 with about 889,000 electric vehicles delivered through June 30th. The company had already surprised the industry in the first quarter of 2023 as its Model Y sports vehicle became the world's best-selling car with about 267,200 vehicles sold in the first 3 months of the year, ahead of Toyota, which sold 256,400 Corolla units and 214,700 RAV4 vehicles worldwide. All right, so that is the perspective of a car manufacturer looking at this saying, wow, they are really making some fantastic gains here. Now, it's true, Toyota did sell 5 million cars in the first half of 2023. So Tesla is just under a million, but Toyota didn't sell 5 million EVs, right? This is a new market that's being created. So when you hear folks say, well, yeah, other car manufacturers are selling a lot more cars, we've got to compare apples to apples. What are they selling? Tesla is selling EVs while other car manufacturers try to move into that market. It's a sea change in terms of management, engineering. So it's not, again, an apples to apples comparison. Now, Mazda, they're the company that said no mas, okay? Mazda began production of its first all-electric vehicle, the MX-30 sports utility, in May of 2020 in Japan and began selling it in the U.S. in 2021, but only in a limited capacity in California. The company sold 66 MX-30 EVs in the first half of 2023, 324 in 2022, and 116 in 2021. Paltry, okay? The vehicle only has a range of about 100 miles. The Japanese automaker, Mazda, however, has decided to discontinue the Mazda MX-30 EV for the U.S. market following the 2023 model year, but will still sell the vehicle in Japan and Europe. So they are bowing out. They're saying, you know what, Tesla is knocking us out here. We're going to keep it going in Japan because it is a Mazda. You may have some loyalty there in terms of vehicle sales, but this thing isn't really, hitting on much of anything. Mazda will focus its electrification efforts in the U.S. on plug-in hybrids, such as the 2024 CX-90 PHEV, the upcoming CX-70 PHEV, and the new CX-50 hybrid, Mazda North American operations said in the July 28th statement. Now, look, plug-in hybrids, I like them a lot because if you're not able to find that charging station, or if the charging station you find is in West Baltimore and you really don't want to spend an hour sitting idly in a West Baltimore charging station, you want to get the hell out of there as soon as possible, you probably want to jump out and add a quarter tank to the old internal combustion engine and then go somewhere else and charge comfortably. That's a real concern. All right, what they say about Tesla is true. It's more than a car company. It is a technology company. They are actually working on AI and robotics over at Elon Musk's group of companies, including Tesla. That AI piece is integral to the self-driving aspect of those robots on wheels. Now, I want you to watch this video right here. Artificial intelligence just got rid of an entire staff. All right, just fired an entire staff. Artificial intelligence. There's a massive AI disruption coming soon. Follow the technology. Watch the video, guys. I'll talk to you soon.